So, James, thank you for joining us to the first of our In Conversation podcasts, where we'll be looking at and discussing some sort of topical issues and seeing how that affects the Argentis investment suite. So, thank you for joining us. Conscious it's sort of a hot day out there, so we'll kind of press on and we'll sort of get into this. So, let's start off with something sort of fairly easy and something that's sort of been happening in the markets recently and been talked about. Liberation Day and Donald Trump. Tell me a little bit around that and sort of what that's all about.
So Liberation Day was the big news of the last couple of months. This was Donald Trump's attempt to, in his words, reset the world order. So trying to ensure that America was getting a fair deal in his view. I think that the challenge that the US has had for a long time is that it doesn't make quite as much as it used to. So it's buying in a lot of the goods, and that means it has this trade deficit. Of course, Trump has fairly firm views on some things. So he had a rather excited demeanor when he was talking about these tariffs that he was putting in place. He was putting in place tariffs of up to 145% on some countries in the case of China,
Yeah.
and even on areas as the jokes were going at the time on islands inhabited only by penguins. So it was the sort of thing where it was going from one extreme to another. No real clear logic. There was some speculation about where the math was coming from. And it turned out the math didn't really matter because after the initial announcement, there was lots of sort of back and forth, one of which was the conversations, the deals that were trying to be done with various different countries. And there was also the impact of the courts, because the reason Trump was able to, or thought he was able to put these tariffs in place is because he considered it to be an emergency, something that he had to act on as president. And the courts weren't quite so clear on that. They thought that actually he needed to put this through various parts of the American government to make sure it was approved. That was very quickly undone. So the courts, after they appealed, a higher court said, okay, actually you can carry on. Of course, what all this means is it's uncertainty. It's going back and forth with this legal wrangling. So you've got Trump saying one thing, having negotiations, his team with various different countries, and there was, as we've hinted at in some of the communications that I've sent out, there was this sort of joke acronym that was going around, TACO, Trump always chickens out. So we've seen Trump having these conversations with different countries, being very loud and vocal about it, but then actually sort of pulling back quite often because he sees what's happening in the markets. And we saw a big downturn as markets reacted to this.
Yeah.
Because it does have impacts all around the world when America starts playing games with what they charge people to import goods into the country.
Okay. And just sort of on the point that you made there around sort of I guess there's a difference in the impact of Trump sort of making a decision to do it, but actually from a legal standpoint, there obviously is still some legal wrangling and things that's going on. I guess, what do you think the impact might be if Trump is sort of successful in sort of his appeal and actually gets his way?
Well, this is the big question at the moment because we've seen markets recover really quickly since Liberation Day, since the 2nd of April, and it's partly because they think that it's not going to be as bad as they first thought. And even if he is successful in his appeal and he is able to put these tariffs through, he's already walked back on many of them. You've seen it in the UK that he's walked back on most of ours, and the worst of the tariffs, certainly in the case of China, have been pulled back.
Okay.
So we wait to see what it might mean. He likes to talk about, and he has talked about the fact that he basically gives out a very big number and then has people negotiate with him. It's what he's done throughout his career. So we'll see what happens. We've seen the dollar weakening, which is not that unusual, but it's unusual in the way it's been happening, and it's been unhelpful for us as UK investors. And as these tariffs start to get pushed through, it's very difficult to see the impact over the medium to the longer term, because at the moment we're unsure. Markets are unsure, manufacturers are unsure. So you've seen someone like Apple, for example, has struggled recently because Trump has said, we don't want you to build your phones in China. And they said, okay, well, we'll build them in India. And then he says, well, we don't want you to build them in India either. So then they don't know what they do. They don't know how to invest their money to build factories in different places. And this applies to lots of different companies. It applies to lots of commodities as well, because people don't know what the economy is going to be doing. So it's a lot of different potential outcomes. It's about trying to be sensible about,
how we perceive those risks. Yeah, absolutely. And I guess one of the things that markets don't like is that uncertainty. So that sort of brings challenges. Thinking about kind of tariffs though, and adding them on, if there's any level of tariff, one thing that would bring is prices will go up, which obviously then brings the spectre of inflation back in, which is something that over recent years has kind of disappeared. It was a big thing sort of a few years ago, cost of living crisis and things that was happening. If this brings in, I mean, talk to me a little bit around what's happening with inflation and what expectations are there.
Yeah, inflation is one of those things where, as you say, it has been on the way down. And there was a rather odd data release recently, which I say odd, I mean, it showed that the US inflation had fallen again, which is strange in that you would think that as tariffs start to be applied, that prices will go up, which would make inflation go up. Of course, inflation takes time to come through. Those price rises take time to come through. In many cases, what happened is that the factories already had they've already had their goods, they already had their materials in place. So they didn't need to increase prices so soon. We would expect that inflation will probably start to tick back up in the US. Okay. We have seen it already tick up in the UK, which is unhelpful when you're trying to, when you're trying to plan government budgets and indeed household budgets. And there's been a lot of talk as well recently about the impact in bond markets, specifically government bond markets. And as inflation comes through, that does make things trickier in that respect. And one of the key focuses at the moment, again going back to Trump, is his one big beautiful bill, which he's trying to get through at the moment. And this is a package of very different things, but the real big one is tax cuts. So more spending on things like the military, but also cutting taxes for a good proportion of the US. Not necessarily that surprisingly, those who are possibly more well off, and the impact this will have on US government borrowing. And we're probably a long way away from people being particularly concerned about US government borrowing, but it is starting to be a topic that is drawing more attention. The bill is going to add a lot of costs to the US deficit, and we've already seen some concern over other regions. So in Japan, for example, and obviously we saw what Rachel Reeves was saying yesterday in terms of the UK and our debt over here. So inflation is going to, I think, continue to be a theme again, as we had sort of started to forget about and prices were coming down. And of course, there's always the issue with inflation that, even though the rate comes down, the rate is only the rate of increase. So if those prices are still high, it has an impact on the amount that households have to spend, which has an impact on things like GDP. And one of the things we really want to watch out for, governments, central banks are going to want to watch out for, is being in a sort of stagflation environment where we have lower growth, which we are seeing we are seeing in the UK, although our latest growth number was actually the best in the G7. I think that was, everyone pretty much assumed that was a temporary thing, but also high inflation with that lower growth, which is not an ideal combination, something that central banks will want to be very wary of. We saw the ECB cut rates recently in Europe. We suspect that the Fed is probably going to cut again in September. We're not quite sure what the Bank of England is going to do because they're trying to weigh up these two things, whether they don't want growth to struggle, so they want to cut interest rates if they can, but they also don't want to move too soon because they don't know what's happening with the US and with global growth. So it's a tricky situation for everybody, whether you're Rachel Reeves or someone just managing a home budget. Yeah, it's a tricky time. Okay, so straight in with a question then. It's a tricky time. So as a fund manager, as somebody that's kind of responsible for making some of the decisions with the funds, how's that sort of playing into your sort of day-to-day thinking and the actions that you're taking with the fund range? It's an interesting question, actually, because often when there's a lot happening and there's lots of questions, you would think that the best thing to do is to do something. As is often the case, certainly at our latest review, our thought process was, we don't have any certainty about what's happening. So honestly, we're not doing that much. We're not trying to predict what Trump might say, what he might do next, what the UK, Europe, China might do to react. It is certainly the case that it's frustrating when we have a situation where someone in Trump who is quite happy to say that he just says things off the cuff, says things to be dramatic, to get people to react. Markets do react to that. Markets don't like uncertainty, so they react to that. But then they bounce back so quickly. We've already seen that since the 2nd of April. And I do think in some ways that our clients in general, have had a period since, for the last 10 or 15 years where they've seen many sort of strong market corrections, going back to something like COVID even, but then a quick recovery. And
Yeah.
we saw that again recently. And it's nice to see. Obviously we don't want markets to remain low, but it's not what often happens. We do often have periods of longer downturns, which is perfectly normal investing. Over long periods, you will see periods. You'll see times where that happens. That's fine. Over the very long term, equities generally are the best place to be, and they do go up. One of the things we're looking at the moment is we're going back to this sort of Magnificent Seven question, because this was the theme for much of the last couple of years, and it was a very sort of challenging time if you were trying to manage a balanced and a diversified range of portfolios, because it was basically US or bust. You had to be in the US, you had to be actually in those sort of top seven stocks. And since the 2nd of April, we've seen a big rally, so sort of 8 to 9% in US stocks. But 2/3 of that has come from the top seven stocks again. And actually, as these things go, the top seven is not the same top seven. One of them has been replaced. So Apple has been replaced by Broadcom. I mentioned earlier the challenges Apple has had. But it is those top seven stocks. So there's 500 stocks in the S&P 500. 7 of those are responsible for 2/3 of the rally over the last couple of months. That is, it's not ideal, shall we say, because we're putting a lot of weight in those stocks. We're hoping that they are going to be able to justify the investments and the earnings expectations that people are baking in. And we did see previously that the market was broadening out, so it was broadening out into more of that 500 stock range. And we saw as well that the UK had done better, that Europe had done better, helped by what's happened with the dollar as well. But we will, it's going to be an interesting time as to whether that market broadening can continue, or whether we're going to see people effectively just using, I suppose, some investment muscle memory. So just redoing what they've done before, buying the same stocks. We'll see how that plays out.
Okay, good stuff. Look forward to seeing how that goes. So I guess sort of in closing, what would you say were the one or maybe two things that if we were speaking to clients, that you would sort of really want to get across if we were to put you in front of those clients? What were the one or two things that you'd really want them to know?
I think much of what I'd say is what we would say whenever we see volatility, we see uncertainty. So it's all about keeping perspective. It's trying to remember that certainly we don't invest, and hopefully our clients don't invest for the short term. Mm-hmm. So whilst there might be ructions in courtrooms, and there might be excitement in various different tweets and statements that are made, they move headlines, they move markets over the short term. But we invest for the long term. We invest in a diversified way, so we're not just exposed to single sectors, single regions. As I said earlier, we have seen shocks before. We usually see stocks recover. And we have to remember the lessons from history. We have been through the invasion of Ukraine. We've been through COVID. Markets recover. Markets generally, I think we can be fairly safe to say the markets will always recover, because if they don't, then something has gone so fundamentally wrong that we won't care what happens with markets. We won't care what happens with our pensions, because it doesn't matter anymore. This is about remembering that investment is always about remembering that history. We are watching the data. We are watching what happens. We're watching what's happening with inflation, what's happening with GDP, how central banks are managing their investments. But we are focusing on that mid to longer term. We are focusing on valuations, so making sure that we are investing in areas that are not too overvalued. So, for example, that's why we haven't been quite so heavy into the US. But we might see areas in there which have a little bit more value now. And we're not chasing headlines. We're making sure that we stay patient and only making changes where we think we need to make them. We won't be making changes because it feels like the right thing to do.
Okay. So I guess it's those investment fundamentals of, as you say, long-term view, ride out the short-term volatility, and, as you say, looking at the sort of basics that allow you to make those decisions with the funds that are there.
Yeah, and just making sure that clients have that patience to understand that markets go down, markets go back up, but making sure that as long as their situation remains the same, that remaining invested, not trying to time markets. That old phrase, time in the markets, not timing the markets. Yeah. It's a cliche, but it works. And I think what we have to really remember.
Okay, fantastic. James, thank you for the opportunity to have this conversation today. And look forward to speaking to you again soon.
Great. Thanks, Phil. Cheers.
Thanks now.